Hey, fantastic fam. Welcome to our community where we combine the woo and the work. We are two professional women who believe we can have it all and constantly upgrade ourselves to meet our visions. I'm Kalyani and I've chosen the off-roading path to personal development, being an entrepreneur with the journey of motherhood. I'm an economics postgraduate and I love working with all things mind and money. I've founded and sold one business and I'm now building this business that feels like fun and freedom for life.
Hi, I'm Rupali. I'm a numbers nerd turned Reiki master and many other things. I found a passion for all things wellness. I've worked in banking and finance for 15 years and I love combining that knowledge with all things energetics to create impact in a fun, easy way for others. Join us as we share the behind the scenes of us creating wealth, freedom and magic.
Let's talk today about how you can always lose only the amount that you're prepared to lose. What I want to say is how you can never lose more than what you're willing to lose. And the way to be able to do this is by having a plan before you enter a position. I say this to all my paid clients as well, and this is important information that I want to share on the podcast today, that we always enter a position with a plan. The plan has 4 things that we know from before. Number 1, the strategy that you're going to apply. Number 2, whether this position is going to be a long-term investment or a short-term trade. Number 4, then when are you entering, and that needs to be a mindful decision. And that's number 3. And number 4 is for the exit. You need to have a plan based on your strategy and based on whether it's a long-term investment or not. So the way that we do all of this, the way that we execute these plans is first by having different accounts for different time horizons. So if it's a long-term investing account, then that's if it's a long-term investment, then that goes in the long-term investing account. If it's a trade, then it needs to go into a trading account. Why this is super important is because when you are checking a trade versus when you're checking an investment, based on what the market has been doing, based on the movements in the markets, the hat that you wear, the thought process that you bring to the table is very, very different. With a trade, you want to look at any small movements, you want to look at whether your target has been achieved, whether your strategy is showing sell signals, and then sell or exit the position at such a point. If it's a long-term investment, then you want to wear the hat of checking if the business is still fundamentally profitable. Within the short run, which means up to about 1 to 3 years of time, generally good businesses don't become fundamentally bad businesses all of a sudden. So this means that you're not exiting your positions, you're not closing your positions on a very frequent basis if you have done your due diligence before you enter the position. So in this way, all these 4 parameters are set from the start. As part of your strategy, you also know the amount that you are willing to lose and you set that as a stop loss. When that is set as a stop loss and you have your target, that means you're already setting yourself up for a win. Why is it super important to have a plan before you go into before you take a trade, whether it's an investment or a short-term trade? Is because this eliminates the human emotion of greed or fear. The 2 human emotions that play a lot in the stock markets are fear and greed. When the markets are doing well, investors are propelled by greed, where they want to see their money make more and more, and they want to stay invested in the markets. And what happens is that the markets don't end up going in a straight line. They will go up and then go down. So when, let's say, the market is at an all-time high, let's say at a level of $100, the stock is at $100 price. and the markets are at an all-time high. As a new retail investor, as a new small-time investor, you might think, oh wow, the markets are doing so well, this is my time to make money, I'm going to keep my investments, I'm going to keep this position because it's going higher and higher and higher. Without a plan, this is what you end up doing. And then lo and behold, the market, as we know, breathes in, breathes out, breathes in, breathes out. The market will come down. And when it does, let's say the following week, come down to 80 or 85, your profit, your unrealized profit looks like a very different number now. And that then causes a lot of anxiety because you were in your mind profiting an X amount, whereas now it's an X minus Y amount. It's a smaller amount that you're profiting. And sometimes it's very hard to get past that subconscious barrier, and it often could, it often or sometimes could start playing up as a failure or a loss in your mind. Whereas it's not a loss, it's still, you've still made a gain from wherever you started off from until the price point. There is likely to be a gain, but since it's not as big of a gain as it was the previous week, it starts feeling like a loss, like a failure, and then you bring that energy into your next trade and the next trade and the next trade after that. Which is why when we take a position, we take the position with full knowledge of these data points. And when that target is hit, or when the sell signals are seen, when they manifest in the chart, you simply just sell without having any greed around it, because that was your plan. Your plan played out, the market delivered, you simply just sell without having this greed step in. Versus what could also happen when the market is not doing very well and it is bearish in sentiment, and the market goes down. You bought a position and it's come down now. You bought at 100 and it's now come down to, let's say, $80, and your stop loss is set for $78, $79. You are feeling scared, but you know that you've done your due diligence and you've set your stop loss in a way that still profits your entire account, and you're losing an amount that you're willing to lose instead of a free fall. So when the stock touches $78, which is your stop loss level, let's say, you simply just close the trade. You don't move the stop loss. The stop loss needs to be added as part of your order that you enter into the broker. And that means that you'll automatically be stopped out. When you're stopped out, that's it. There is no regret, there is no there is no analysis paralysis, there is no constant kind of delving on the loss, because this was a loss that we were prepared to take. And instead of having a free fall, this is the safety net that we build, and the limit that we decide for ourselves to walk away from the trade. And things like this do happen. Things like this definitely happen. The market goes up and down, and there's no one has an oracle ball. No one has a future predicting raven that tells them what's going to happen in the markets. So the best that we can do is to protect ourselves and play with the probabilities in front of us. So the plan protects us against fear and greed, which are the two extreme emotions that we see in the markets. If you don't know how to plan around these data points, if you don't know how to have a plan, what strategy to implement, and the other points, then that's exactly what I teach in my programs, whether that is She Invests 45, which is a group coaching program on stock investments, which we run for 45 days. The details for the upcoming program will be updated either on my social media or on the website. And I also do this one-on-one for people who want to take a slightly different pace to learning. So if you're interested, please hit me up with a DM, and I'd love to speak to you. predicting raven that tells them what's going to happen in the markets. So the best that we can do is to protect ourselves and play with the probabilities in front of us. So the plan protects us against fear and greed, which are the two extreme emotions that we see in the markets. If you don't know how to plan around these data points, if you don't know how to have a plan, what strategy to implement, and the other points, then that's exactly what I teach in my programs, whether that is She Invests 45, which is a group coaching program on stock investments, which we run for 45 days. The details for the upcoming program will be updated either on my social media or on the website. And I also do this one-on-one for people. We would really appreciate your feedback as reviews on the podcast app you tune in from. Support us also by sharing this podcast with 3 of your besties who would benefit from being fantastic.